This is our weekly market update where we start in the US, across Europe and Asia, and then in Australia, covering commodities and crypto along the way. Stocks are still reaching for the stars, as this week's MSCI Global Index shows, by edging higher on Friday after registering a record close in the prior session, while US Treasury yields rebounded after sliding the day before when expectations climbed for US rate cuts. The S&P 500 notched a two-week winning streak, despite slipping slightly on Friday, closing about 0.1% lower after hitting a fresh intraday record, weighed down by fresh data showing consumers continue to worry about the economy. But the NASDAQ rose 2% across the week as Oracle joined the AI melt-up. The Dow Jones Industrial Average fell 0.6%. The European Stock 600 was up another 1% across the week, though slightly weaker at the close on Friday, while the ASX 200 rose 0.7% to 8,864.9 at the closing bell, with 10 of the 11 sectors in the green. It was a heavy data week in the US, with inflation and jobs data showing on one hand a significant slide in momentum in the jobs market as more revisions landed, while inflation was a little more stubborn, again showing the potential contention between the Fed's dual mandates on jobs and stable prices. That said, these data releases did little to alter expectations that the Fed will still cut interest rates at its September 16th to 17th meeting, despite the whiff of stagflation that is in the wind, as the University of Michigan Consumer Sentiment Index, which tends to be negatively correlated with inflation, fell to 55.4 in September from 58.2 last month, missing expectations. And their survey of preliminary expectations for one-year inflation was unchanged from prior months' readings of 4.8%, but inflation expectations over the next 5 years climbed to 3.9% from 3.5%. Data on Thursday showed US consumer prices rose slightly above expectations and the sharpest monthly increase since January, while weekly jobless claims jumped to 263,000. That's the highest level since 2021, underscoring signs of softening in the labour market after last week's weak non-farm payroll report. The US economy likely created 911,000 fewer jobs in the 12 months through to March than previously estimated. Inflation was a touch higher than expected, and tariffs are likely to keep it elevated over coming months. But the weakening of the jobs market is now the Fed's priority, with rising jobless claims hinting at a pickup in layoffs at a time when hiring is subdued, ING analysts said in a note.